Hi, good afternoon, good evening. My name is Mina McHale. I'm current president chapter of the International Model Investment Club. Welcome to our October 2023 meeting. Before we get into tonight's agenda, we'll go through a quick introduction and disclaimer of the group. Below on the page, you should see links to our YouTube channel, our Facebook page, as well as our Better Investing page. You can find previous club meeting recordings on our YouTube channel. So please feel free to visit. Um, so just some background on our club. We were founded in May of 2016. We are a better investment model club that's open to the public. Um, our meetings occur monthly, and they occur on the third Monday of each month, with the exception of December when we meet on the second Monday of the month. Um, we only use hypothetical money in this club. This allows us to avoid taxation and currency exchange issues. And it allows us to have an international roster of members. Um, Along with the fact that we use hypothetical money, it allows us to act as primarily as a learning lab to apply better investing principles and other valuation metrics to make sound and long-term investing decisions. So we use better investing principles and the fundamentals of stock investment and the use of the stock selection guide to guide our decision making. All our meetings are held online. And as I mentioned, that allows us to serve guests and visitors as well as members from around the world. Currently, we have membership in the United States, in Canada, as well as in China. You will see a control panel on your right-hand side of your screen. The agenda is available under that handout section for you to peruse. If you are a visitor or guest, welcome. You will be muted for the duration of the meeting, but please feel free to post questions in the question section of that control panel, and we will do our best to answer those questions as they come in. And then at the end of our meeting, we will have a time where we open up the floor to you for questions, comments, feedback. We look forward to hearing from you then. All our meeting segments will be timed, and sometimes you may hear members reminding others of their limits. This is just to ensure that we try to stay on track as best as schedule and respect everyone's time. So now moving on to a disclaimer before we get to tonight's agenda. The information presented today is for educational purposes only, and it is not intended as a recommendation to buy or sell any of the securities that are mentioned tonight. The views expressed are of the participants only and do not necessarily represent those of Better Investing. Investors should conduct their own research and analysis before making any investing decisions. The securities discussed may be held by the presenters in their own portfolios, and the presentation may contain images of websites, products, or services that are not endorsed by Better Investing or by any of the presenters specifically. And finally, this meeting is recorded and it will be posted on our YouTube channel in the coming days for future reference. So moving on to tonight's agenda, we have an education. So we will be going through a treasury report to see the current state of our portfolio. We'll then move on tonight to a stock study in the healthcare sector that will be presented by ILL and Nitra. We'll then, this meeting, given some of the rescheduling, we will have some additional time for Q&A on the stock studies and discussion so that we can ensure that we have enough time to get an in-depth and quality discussion about the companies that are presented. We'll then move on to we'll open the mic up to our guests for questions and comments. And then we'll move on to club business. So that's when we'll discuss any voting motions for buying or selling or any other motions the club members may want to raise. And then we'll address other issues such as scheduling further stock studies and education topics for the rest of the year as well as 2024. So having said all that, thank you very much. I want to see if Reddy's here. No, at this point, I will hand it off to Joanne if you would be kind enough to present our treasury report until such time as Reddy is available for us.
Sorry, I had to unmute myself.
Thanks,
Okay, thank you, Mina. Okay, all right. This is this month's treasurer's report. Reddy has filled this out. Okay, so he deposited $1,300 on August 16th. I think he needs to update this. I think it should be this month. But anyway, we did end up buying paycheck. It fell below our 115. And we bought it at $113 a share. We bought $4,000 worth. We'll discuss on who should follow that stock. We didn't sell any stock and we didn't pay out anyone's. Oops, sorry. And the cash balance is $4,900 as of 10/16/2023. Okay. I'm sorry, I'm not used to using this mouse. Okay. This is our heat map. You'll notice that Vertex, Qualis, Schwab, Facebook, they're all doing well. Where Paychecks, we just got that, so it's hovering around the middle. And we have like $5,000 in cash that we can spend if we have a stock that we want to select this stock study. So this is a current gain loss. Amazon's down, Disney's down, IIPR's down, LGIH. This, I think IIPR has struggled. It's a REIT. The REITs have gotten hit pretty hard lately, and then Disney's also been struggling. I'm not sure. I don't know who's following LGIH, but the housing with the interest rates, that's also down. But our gain and loss were 20% up. Okay, biggest winners, Schwab. Vertex is doing really well. We might talk about trimming Vertex. I think it's like 26 or over 20% of our portfolio. So we'll probably want to take a look at that. And then these are our losers so far. And then our club performance versus benchmarks, we're doing really well against the benchmarks and for the year to date. Lifetime, we're down. 1 year, we really took a big hit. Okay, so this is a portfolio review. I sent out a message for everyone to update their SSGs. If we need to go over it again on how to update your SSG so it connects to the My iClub, we can do that. So LGIH, who's following LG? Mina, you need to update yours. Christopher is with Qualis and Jane with Vertex. If you can update your, and then I think Jay is taking paychecks. She'll update that. Okay. Here's our diversification. I think this is, can't remember what the orange, green, what that signifies. Oh, here we go. Small, medium, mega, large. So we'd like to have like 50% mid cap, and then we have like 28%. So, and then 25% small, and then 25% large, mega. So we're really heavy on mega. I think that's due to, well, because we've got Facebook and Google and Amazon. And Vertex is really propping up our mid-size. So I'm not sure, like, oh, here we are, it's over 20%. So I'm not sure if we want to consider trimming that. These are our sector diversification. We're not too, and I think we're really well diversified. Some of these we probably won't ever get into, like utilities, I think energy. So I think with our current diversification, I think we're doing well. let's see. Oops, is that it? I think that's it. Are there any questions?
No.
Okay.
Thank you, Johnny.
Proceed.
We have
Okay.
a Bakul join us.
Hi,
He's on
Bakul.
with us. He has 10 minutes.
Okay,
He
maybe we
has
can
10 minutes. Yes, or 20 minutes. So,
maybe we can
Jo-
ask him some questions. Let's ask Bakul some questions while
yeah,
we have
that's what I'm
him.
going to say. Yeah, Bakul, I know you have a very limited time. We appreciate you joining us. You have to leave it by 6. We have some questions. We have been using your financial ratios.
Yes.
One of the questions is that for the top 3, Joanne, can you pull out the financial ratio, the top 3? So the question is, what's
I'm not
the
ready
score?
to do. I'm not ready to.
Okay,
I
let me
don't
see if
have
I'm
that.
if I have it. It's on the just let me take a look. The question is, what we'll consider past? Like we look at the 10 years. Let's just say if the 3 out of the 10 years did not meet that criteria, do we still consider it pass?
For those top 3 you're talking about?
Yes.
Yeah.
So it depends which years those 3 years out of the 10 occurring. So like if one of those years are in the pandemic, then and if it's a stock that's affected by the pandemic, then it's okay. And or if they have a glitch 1 or 2 years specific to the business model or within that industry, then that's acceptable. So 3 out of 10 is not bad.
Okay.
Okay. So here's
another
an
question
example.
is, go ahead.
Sorry,
Okay.
can I ask a follow-up question related to that? So we're first introduced by Ron, and he mentioned that the first 3 we have to follow very strictly. So if you don't pass any of the if you miss like 1 year in the first 3 metrics, if you don't get a 30 out of 30, then you don't even move forward. And there's a few companies, things like Google and a few others, where they did miss 1 or 2 years, so the score was maybe 29 or 28.
Right.
So I just wanted to clarify that. So you're saying it's okay, you just have to use some judgment. Is that correct?
Yes, there's judgment involved. That scoring of 10, 10, 9 is not something I advocated. I'm not, maybe it's some modification that you guys did in the club, and that's fine. The top 3 criteria are a little stringent if you really think about it, because ROE of 15 on a consistent basis for 10 years might not be practical, especially if you have like a recession in those 10 years, or you have a one-time 100-year event like a pandemic. Then in those years, it's not going to meet those criteria. But if the rest of the years meet those criteria, then it's still a pass. So that's where the judgment call comes in.
Right. Okay. Fair enough.
Yeah.
Jay, we had another
question.
go ahead.
Yes, go ahead, Joanne. You have another question.
If you don't have a complete 10-year history, can you still evaluate? What's the minimum number of years that you can have, or does it have to be at least 10?
5, minimum 5.
Five's the minimum? Okay.
Yeah.
Okay.
Yeah, but it requires lots more judgment in that case because you have a shorter history, right?
Right. Okay.
So yeah, so it does require a little bit more judgment in that case.
Okay. And then, okay, so the top 3 ratios are the most important. How are the following, let's see, 1, 2, 3, 4, 5, 6, 7, are those all have equal weight, or are there some that are more critical than others?
It just
think-
depends on the company and the industry it
Okay.
belongs. But for the most part, if you look at like a ratio like free cash flow over net income, which is number 5 in this particular thing
Yeah.
here. Okay, so what's that telling you is that for each dollar of profit, how much free cash flow is generated, right? So that's why if it's greater than or equal to 1, that seems to be very healthy. In other words, if the free cash is kind of sucked away into something, and if it's less than 1, then you got to figure out like where is it landing on the balance sheet? Is it infrastructure, or is the management blowing it away? So that's what you got to figure out, right? So a ratio like 5 is important. Then if by the time you get there, you would know it by the third ratio, which is free cash flow to sales, right? So if the free cash flow to sales is not healthy, like greater than 10, then it may be that the cash is draining somewhere. The management is deploying cash somewhere, but that somewhere is something the investor has to find, and usually it's sitting somewhere on the balance sheet.
Okay.
Yeah. So the difference is, like, net income is an accrual figure from the income statement, whereas the free cash flow is telling you hard cash coming down to the bottom after deployment of capital expense. Right. So that's why you have to look at all 3 in conjunction in the industry that the company belongs, right?
Okay. Can we just take a quick look at one of our other the competitor that we chose?
Okay.
This doesn't have all the colors, but
Oh, that's okay.
this is kind of.
What if I'm colorblind? It wouldn't matter, right?
Okay, you're right. Okay.
All I see is numbers. I don't care about the rest.
Yeah. Okay. So is this one? I mean, this one's actually not doing well right now, but I guess a question is, go ahead.
The question is, we just look the top 3 first, right? It's
Yes.
a screening. Look at top 3. So top 1 ROE, you are 2 out of 10 years, you meet that criteria.
Yeah, that's okay, but there's still homework to do. Like, if you look at how'd you get okay, so what you have to do is, like, if you look at those single digit ones, like in 2022 it's 7.9, and then in 2014 it's 6.28, in 2013 it's 5.85. You're going to dig into those and see why those are single digits. That's step 1. So if you pass that, and if you feel satisfied, and the management has the candor or the gumption to say, hey, why the ROE is suddenly like 7.9 and 6.28 and 5.85 versus those double digits, and if it's satisfactory, they will give you confidence to say, okay, well, even though the criteria is over 15%, I can live with those 3 years, probably due to anomalies or something specific to the company or the industry or stuff like that. So you have to justify that to yourself, right, if it's acceptable. And suppose it's not acceptable, then you look at the next few that are still under 15%. You can look at the 12, the 13s, and the 10s, right? Because there is 2 years where it's above 19%, which is 2018, 2017. It's 19.12 and 17.41. So suppose those are exception years, then the rest really is more it's more like baseline numbers versus those 2 exception years, which are over 15%. So you don't know until you dig into it, right?
Okay.
Yeah, there's always homework to do.
Okay.
Okay, so that's
Right.
ROE. Now ROIC is the same thing. If it's like, the recurrence over 10%, so you look at those single digits just like the ROE, because they'll be the same year usually, and see at the same time why those ROICs are single digits, and it has to satisfy. Go ahead.
Can you tell us, okay, so this is what I understand, is that when you see a number that's not meeting the criteria, you need to look a little deeper
Yes.
into the company on what's causing that, especially I guess when it's fluctuating up and down like that. But where do you look? Do you look at are these balance sheets or
Well,
actually
okay. So where do we look here? So, return on equity is based on a net income over equity, right? So net income is on the income statement and the equity is on the balance sheet, right? So you really have to look at the net income over the years and look at the equity over the years and see what's causing those single digits. Is it the denominator, which is the equity, or is it the numerator, which is net income, or is it a combination of the two, right? Because it's
okay.
a ratio. It's a ratio of net income over equity. So now the thing is, as you go and study that, you'll discover that, oh my God, actually return on equity is really return on assets times leverage, and that's your ratio 9 and 10. Those are superfluous if you really think about it, right? So
Okay.
why are they
Yeah.
superfluous? Why are they superfluous? So let's think that through a little bit. Return on assets is net margin times asset turnover, and financial leverage is the third component. So suppose you get those single digits up there. Like let's look at, for example, look at 2022, which is 7.9, right? Then you come down and you can see that, oh, if ROE is also return on assets times financial leverage, which of those two components could be contributing factors? So the financial leverage is 1.16, whereas return on assets 6.84. Compared to previous years, it's been lower if you really look at it carefully, right? So that tells me that there's something happening either in net margin or the asset turnover that's causing the ROE to be low, just by looking at this.
Okay.
Right? Now, the other thing you can look at is return on assets is also what? Net margin times asset turnover. The net margin is sitting above the return on assets, which is 8, ratio 8. That's why it's there. So if something goes from 17 to 12, well, your numerator has gone down. That's what I'm saying. Right?
Okay.
Because net over equity and your numerator, which is net income, well, your net margin has gone down, and so therefore, it seems like now you got to figure out, compared to 2021, how come the net margin went down? So that's the question you have to answer. Go dig into the income statement.
Okay. Okay.
I hope I'm making sense.
It's a little bit complicated, but I think if we take one ratio and kind of get into it deeper, if we start, because we're really trying to analyze and this whole structure.
Yes.
And at first we're just using numbers, but I think the objective is to really understand
why.
What do these, why, and then how do you diagnose using these ratios?
Yeah, so it's like so if you look at the structure as is, right, it's like a 35,000 foot view. You're looking through a telescope, right? But then when you see these single digits like 7.9, 6.28, 5.85, when you start digging into it, now you're looking through, you want to look through a microscope. And what kind of things you're looking at? You only have 3 things to really look at. It's the income statement, the balance sheet, and the cash flow statement. And now you got to kind of, basically, it's almost like you have to think like, what is the context of the homework I need to do to figure out why this thing is something like a single digit, right? Otherwise, you could be sitting there forever trying to figure out what's going on.
Yeah, I think with this kind of company where it's really scattered, I think we would probably look at a company more like this company and then dive deeper into these spots that are not meeting the criteria, like what's going on with this company, especially 2022, 2023, something's going on with where they're not meeting the criteria.
Right.
Yeah.
And sometimes for the most part it could be satisfactory, like what you, because you have exception years, and that's okay.
Yeah.
You can't have perfect scores on anything, really.
Right. But you kind of want to justify, like, why is this way?
Exactly.
I mean, they've been so consistent in other areas. What's going on that's causing this?
Exactly. That's right.
Yeah.
And
Okay.
and it's okay to do that homework. Like if the company says that, oh, we've allocated capital to do share buybacks, right? The first thing you should be looking at, what's the share count. If they claim that they did a lot of how they return value to share owners, and if they say we've done so much dollars worth of share buybacks, right? The first thing you want to do is see if the share count went down. If the answer is no, well, that's okay. It's just that they're growing by virtue of issuing shares, right? And so therefore the share count will go up. Doesn't mean it's a bad thing. It's just a strategy, right?
Okay.
Yeah.
But you want to know where the numbers are, what's generating the numbers.
Exactly. Think of this as outcome and what are the inputs that's causing this.
Okay.
Right. And
Yeah,
so what you're seeing, the result of managers doing, they're telling you one thing, but you're seeing this result, and now you want to know between what they're telling you versus the result, is it congruent? Does it make sense, right? And so how would you do that? Well, you can go to the proxy, with the proxy statement. I don't know if you guys look at the proxy statement, which is SEC filing DEF 14A. And in there, just like you have an MDA, management discussion analysis, in the proxy they have a CDNA, which is compensation discussion and analysis. So you go look at that and see, like, there are three components of compensating insiders, particularly CEO and NEO. So and every other insiders that they claim to be NEO. So there are three components. One is the annual salary, the second is the annual bonus, and the third is incentives. And the third is really like something that you got to look at carefully, because that third part is they issue shares, like restricted share units. They may issue stock options, and so if they buy a lot of, if they compensate insiders with a lot of shares, so in one sense it's good, they're giving them incentives. But on the other hand, if they keep issuing them, they can't, then they have to keep buying back shares, otherwise they dilute existing shareholders. So therefore they'll say, oh, we bought so much blah, blah, blah of shares, but they'll never tell you if the share count went up or down or stay the same, right? And so you have to kind of get that thought process and logic in a full circle, so you understand the whole capital cycle.
It's complicated.
Well, I was told investing is simple but not easy.
Okay. All right. How about fun? It could be fun.
It's very fun, especially when you make money, but then you can get depressed for a little bit when something doesn't work out, right?
Okay. Well, we appreciate your taking the time. We know you have to go to your next meeting at 6. So yes, we really appreciate it.
Any other last question?
Management. What section was that? Management, and then what?
Oh, you have to look at the management compensation structure.
What is that? CDNA?
Yeah, it's compensation discussion and analysis. Just like in the Qs and the K filings, you have MDNA, management discussion and analysis. In the proxy, which is SEC filing DEF 14A, there's something called CDNA, which is a compensation discussion and analysis. So in there, it'll tell you the strategy of how the company and the board decides to pay the CEO and the named executives, right? And so you can think of that as inputs, right? Because you got to remember, these guys behave, in what way are they behaving and allocating capital to maximize their own kind of compensation, right? And hopefully it's aligned with the shareholders. If it's not, then you shouldn't be dealing with those companies. Are we good?
Yeah, we're good. Thank you very much. I think we'll move on to our stock presentation. Isla, are you ready to take the screen?
Bye, everybody.
Thank you very much.
Thank you, Bakul.
Can you, Joanne, can you do it?
Here, I can send it over to you. Oh,
Let me see.
there you go.
Can you do it, Joanne?
Yes,
It's
I'm
you
bringing
can
it
have
up.
it now. It's, oh, sorry, the screen will go to Joanne. Okay.
Is it, do I have it?
Yes, you do. Now you do.
Okay. Okay, Isla.
All right. So first, let me just say good evening, everyone. I guess it's evening where you are. We're going to be talking about medical instruments and supplies industry. How we came to this was we started looking for companies that actually passed the test of Bakul's ratios. And while we were doing that, we came upon one that looked very good, and that was ResMed. And then we started looking for a competitor, which was a little bit more difficult. But that's how we came to this sector and how we came to this company, just looking generally and looking at the SSG visual analysis and then looking at the Bakul's ratios. And that's how we ended up with ResMed and LMAT Vascular. So as an overview, the healthcare as a sector accounts for about 10 billion of the S&P market cap and 18% of the U.S. GDP. Medical equipment and supplies accounts for almost $1 billion of the healthcare market, and the U.S. makes up 45% of the world medical device market. That is in terms of manufacturing and in terms of use. Now, medical equipment and supplies researches, develops, and produces non-electronic medical, surgical, dental, and veterinary instruments and apparatus. The industry does not manufacture electromechanical or electrotherapeutic apparatus, X-ray apparatus, or ophthalmic goods, and I'm not really sure where they put all that stuff. But anyway, key trends for the industry currently are rising tariffs because a great many of these apparatus are made in countries not where they're used, so a tariff has to be paid when they're shipped in. Heavy government regulations, as we know from the FDA and other things in this country. Group purchasing organizations are somewhat new. They're organizations that are starting to sign up large healthcare systems and nursing homes and other places, and they're going to purchase all of the similar supplies that these places use, and they're going to purchase them for them, so they don't have to do this individually, and they can get a discount for scale. There's also logistics medical supply companies. These companies specialize in transporting the goods from wherever they're distributed to the company that bought them. So they have expertise in making sure that all this equipment gets to where it's supposed to be in one piece, refrigeration and otherwise. Now, in the industry's favor, unfortunately, there is a rising prevalence of chronic diseases and an increasing number of surgical and diagnostic procedures. So the outlook for this industry is pretty good. There's also the Internet of Medical Things. There's a company that makes a knee replacement, and there's a sensor in the knee that can send information to the surgeon about the gait of the person who has the knee. And they don't have to necessarily have a visit. They don't have to have a virtual visit. They can just get the information from inside the person's knee. So that's the thing that the industry is looking forward to. Now, in terms of additional costs for the companies, there is the availability of big data that's now available to smaller companies. It used to be only available to larger companies, but that's filtering down a little bit now. There is an increasing use of artificial intelligence in the design and manufacturing of these apparatus that are used. But that means that there's also a need for more technically skilled workers, which will increase the cost of labor. And for individual customers, there is the high cost of these devices and trying to get your insurance company to pay for them. So medical equipment and supplies is a very fragmented industry. Morningstar lists about 1,000 companies. Charles Schwab lists 1,935 companies, but 98% of all of the companies have fewer than 100 employees, so they're very, very tiny. So that means also that the cost of big data and the cost of artificial intelligence will be very, very hard on those smaller companies, and there may be a lot of consolidation as a result of that. So some of the financial numbers associated with the sector, revenue as of October 2nd was $263.8 billion, earnings of $15 billion, the PE 25.9, return on equity 8%, gross margins 34.1, net margins 5.9, and total debt to capital 22.6. Expected annual growth for medical device industry is about 5% in sales from 2023 to 2028. And
Okay.
any questions? Nope. Okay, so we'll
Okay.
pass it off to you.
Well, would you like me to pass the presentation? Are you ready, Well?
I am ready, yes, sure.
Okay, I'm making you presenter. You have to accept. Yeah, there you go.
And you said slideshow, right?
Yeah, that's correct.
All right, ResMed. ResMed is one of the companies listed that was shown before. It's one of the largest respiratory care companies globally. Develops and manufactures, distributes ventilation equipment. It's founded in San Diego. It's makes devices for sleep apnea, sleep disordered breathing, and COPD, chronic obstructive pulmonary disorder, and other respiratory conditions. It employs over 10,000 people and has a direct distributor and a direct sales force, as well as independent distributors over 140 countries. Most of the revenue here, this graph, the middle chart, shows that roughly 55% of the revenue comes from devices, another 35% from masks, and 12% is coming from the monitoring software, the software as a service for monitoring the devices and managing billing, managing product patient care as well. On the right-hand side, most of the revenue comes from the U.S., the Americas, U.S., Canada, and Latin America. 30% from Europe and Asia. These are the typical devices that ResMed produces, manufactures: CPAP machines, masks, the machines itself, and the whole system, meaning monitoring as well as the masks and the like. This is one of your most recent product development. It's the AirSense 11, costing roughly in the $1,200 range. And they have a variety of machines. They sell a variety of machines like CPAP machines, APAP machines, bi-level machines, travel machines. Yes. Here's a graph of a comparison between Philips, which is a direct competitor, and this is the market share of software as a service that it's growing. And you'll see towards 22 that Philips is declining in revenue and the like, because well, I'll talk about it further, but roughly Philips and ResMed own roughly 80% of the market, 80+ % of the market. So it's essentially a duopoly between the two of them. And recently, Philips had a recall, one of the products where it was recalled. It was a class 1 recall, and they, as a result, they had not taken on new customers. They were resupplying existing customers, existing machines. So for the last couple of years or so, they've been refurbishing those machines and had not taken in new customers. So in a sense, ResMed has taken advantage of that and has grown their market share. So ResMed is poised for massive growth. Roughly 1 in 3 people have some sort of sleep apnea. Some of the studies that have indicated that roughly 85% of the sleep apnea problems have been undiagnosed. There's roughly 480 million people that currently have COPD. and the number is expected to grow to 600 million by the year 2050. ResMed is approximately a $4 billion company. Their past 5 years sales growth is 12.3%, and earnings per share and pre-tax profit in the 19.4% rate. So their strong points: ResMed is set to command a sizable and largely untapped sleep disorder business industry, both in the developed and the emerging markets. This is growing because as population is increasing in age, and also in the U.S., there's a significant number of people that have been determined to be obese, and so that number is growing. The second bullet item is ResMed produces 12% of its revenue is on the cloud-based devices, where it increases adherence and supporting reimbursable rates and resupply of accessories. What adherence means is that in the past, a good percentage, roughly half of the people that have sleep apnea, that have been prescribed sleeping with these machines, roughly the adherence, the rate that after a year, half of the patients drop or stop using their equipment because of uncomfortableness, because you have to sleep on your back and have this tube on your face. And but with ResMed's face mask, that number they have data that has 90% adherence rate. So that's really, really good. The main competitor, as I mentioned, is Philips, and because of that product recall, has ceded a good percentage of their market share. ResMed's margins are expected to expand. There are right now, that's one of the weak points, is the margins have shrunk recently. ResMed's free cash flow and debt is of concern, according to some of the articles that I've read. Their debt is roughly 681 million due in 5 years. Other items to watch out for is the reimbursement rate. Of course, the CMS is the Centers for Medicare Services, and they're always looking to seek savings in treatments and the like. Third bullet item is that ResMed's the 12% revenue that with the cloud-based connection services, it's largely unproven, but ResMed is significantly directing capital towards making that happen, and so that's something to look out for as well. Market share gains. The fourth bullet item is that according to Morningstar, according to the Morningstar, because of the recall, they estimate that ResMed should be increasing in market share because of doctors recommending their software, ResMed software, and they're familiar with the system, with their data that they're collecting, and so they anticipate that ResMed would increase in its market share, but that's an estimation. So, as an alternative, the affected customers could wait for replacement units from Philips and use alternative Philips products. Here is Ken Kabula's triple play trends. Most of them are in the green. Earnings per share has been uneven, and I've talked about the debt. The Bakula's ratios look really, really good, with the exception on the third row. 2022 is less than, it's 5.45, didn't meet the criteria. But of the three, it's almost a 30%. So it looks really, really good. The free cash flow, row 5 over net income, also has some near ones. 2014, 2015 are pretty close to 1, 2019 pretty close to 1, with the exception of the last two columns. Okay, hang on. So let me see, do we hit escape? Yes, escape. Here's my SSG. I'm estimating 7% forecast. Most of the analysts are 2-year estimate 8.8. Let me see. Here's my, I crossed out a couple of outliers. It is, it's below the current PE ratio is 23.23. Its average is 37, so that's very promising to buy. I'm estimating a PE, high PE of 30, where the last, the average was 37 and even the highest been 43, so it's very conservative. So I have it at a 4-to-1 ratio of a buy. Okay. Today's price was 141.24. The previous, this is the sales growth for the 5 and 10-year comparison. Looking pretty good in the last 5 years. And I chose 7%, namely because I'm sticking pretty close to value line. It's got a sales figure of value line gives it a 53.75 million in 5 years. Using 7%, it's 59, a little bit over, but it's still below the other analyst consensus. And here's the earnings per share estimates. Projected low price, I usually use 80% of the current price. Bakul's ratios, it's, so I've listed some negatives, or what the bears say, what the bulls, but Morningstar is really favorable, considerably gives it some of the words that exemplary capital allocation rating based on balance sheet risk, investment efficiency and share distribution, sound balance sheet, low financial risk, high cash conversion, and low cyclicality, exceptional investment efficacy with a 20% return on invested capital over a decade, strategically sound purchases with healthcare software providers to leverage the trend of lower home care, and a commendable execution of scale efficiency. So Morningstar is really favoring, says the market is underappreciating. It's the sluggishness due to COVID. COVID closed a number of sleep centers, so number of patients were not, that have not been diagnosed, but they expect that to increase. So that's my presentation.
Thank you. Well, Anitra, are you ready to take the screen?
I am ready.
Okay, I'm going to make you presenter.
Okay. All right. Here we go. Okay, LMAT Vascular Incorporated is, okay, I'm trying to see I can make it turn, there it is. Was established by George D. LeMaitre in 1983 and they moved to Burlington, which is where they're located now, Burlington, Massachusetts in 1986. They're a worldwide provider of medical devices and services for the treatment of peripheral vascular disease, a condition that affects more than 200 million people worldwide. Its core customer is the vascular surgeon. Their markets are they sell directly to hospitals in 25 countries and through distributors in more than 70 countries throughout North America, Europe, Middle East and Africa, and Asia Pacific region. By geography, they in Europe, Middle East, and Africa, they're up 26%. In the APAC region, up 21%, and the Americas up 16%. And all three regions are setting records. Okay, the overview of LeMaitre is their portfolio of medical devices are used primarily by vascular surgeons, and they usually focus on the lower regions of the body and you know, the vascular veins, mostly for the peripheral vascular disease is a slow and progressive circulation disorder caused by narrowing, blockage, or spasms in blood vessels. They have a large and growing sales force. Their sales force is large now because in 2009, Morningstar stopped covering them because they only had 57 salespeople. They now have 133 in their sales force, and they want to grow between 135 and 140 for this year. So they have grown since 2009. They have number one or number two share positions in niche markets. The product offering expansion through accretive acquisitions. They're acquiring, they have an agreement with Azio Biologics, which is a company out of Maryland, to distribute their cardiovascular patches. If that does go well, they are going to hopefully or possibly acquire them if it goes well during the second and third year of the term, but they do have an agreement. And they also have an agreement with the company called, trying to think of the name of it, but they have an agreement with another company that I'm sure I have somewhere. They have an attractive operating margin, cash generation, and dividend growth. Right now, their sales is 50.1 million plus 19%, up 19%, and 16% of that is organic. The operating income is 9.5 million, up 63%, and that's an 8% increase. Their operating margin is up 19%. Their net income is 8.1 million, and that is a 130% in growth, and 27% of that is adjusted. Their earnings per diluted share is 0.36 cents, and that's 127% increase, and their cash is up by 9.2 million. From 9.2 million to 90.2 million. How is the company growing? LeMaitre's product portfolio has continued to grow as a result of the company's research and subsequent development of new vascular devices, including its most recent generation of LeMaitre's original valvulotome. The company has also expanded through various acquisitions, and there is the other company, Artgraph Incorporated, and as aforementioned, ASIO Incorporated. Over the last 3 years, LeMaitre Vascular has grown earnings per share by 11%, and that's a good growth if it can be sustained. LeMaitre, the recent chairman and CEO, George LeMaitre Jr., which is that's to be said that 16% organic sales growth and 25% adjusted earnings per share growth was a result of increased hospital procedures since COVID as well, and their 9% price increase. He says, in retrospect, their hiring surge seems well trimmed. They have bovine patches that are up by 16%, valvulotome by 18%, bovine grafts by 13%, carotid shunts by 22%, and allografts by 18%. And that drove the second quarter sales. And most of the revenue is generated in the US. Most of their growth is organic. Their inorganic is only by acquisition, but their sales force, regulatory approvals, distributor buyouts, and price increases are all organic. LeMaitre strengths and opportunities. They have strong customer relationships right now, 133 sales reps, around 4,800 hospital accounts, 11,000 vascular surgeon users. They do have a very they have a good retention of their executive team. Almost everybody has been on their team since 1997, and all the circulation of their positions are within the company. So the CFO went to COO, and so they stay. They have something. They have a solid. That's solid for them. Their biologic implants, broad patch and graft offerings is good. A favorable profit margin and tissue processing expertise. And their capital efficiency and 90 million cash, no debt, or the debt is low. 12 years of dividend growth and prudent expense control. Okay, their weaknesses and challenges. LeMaitre has not been able to tackle the challenges present by the new entrants in the segment and has lost small market share in the niche categories. LeMaitre also has to build internal feedback mechanism directly from sales team on ground to counter these challenges. There are gaps in the product range sold by the company, and the lack of choice can give a new competitor a foothold in the market. There's limited outside core business. Even though LeMaitre is one of the leading organizations in its industry, it has faced challenges in moving to other product segments with its present culture. They're not very good at product demand forecasting, leading to higher rate of missed opportunities compared to its competitors. One of the reasons why the 90-day inventory is high and compared to its competitors is they're not very good at demand forecasting. Thus, they end up keeping inventory both in-house and in-channel. The marketing of products left has a lot to be desired, and they have a high attrition rate in the workforce compared to other organizations in the industry. LeMaitre has higher attrition rate and have to spend a lot more compared to its competitors on training and development of employees. That was also on their call for the second quarter as well, that there's something they really are trying to work on. The triple play value line doesn't cover it. Morningstar doesn't cover it. As a matter of fact, the analysis, Debbie Wayne, which is the senior equity analysis at Morningstar, stopped covering it because she said that the firm had a long way to go before it's big enough to swim with the sharks, and it could end up as a fodder or a larger fish. And at that time, LMAT had the 57 salespeople and had limited products. Their short percentage of float is 3.79. Their EPS is trending up. And here's Bakul's ratio. And as Bakul did, I'm sorry about that. Bakul did go over that with us. And it doesn't look good. But one thing I can say about this company, when I started covering it, it was around $57. Today, it ended at 47 and 40, let's say 47.93. As a matter of fact, that was what it was, 47.93. So I couldn't find why the price dropped, but there's something that's going on. And as we learned the top numbers, he wants to see those a lot higher and find out why. And so it wouldn't have gotten this far, but it was hard to find anything in this as a comparison to ResMed. Okay, so this is another analysis, way of looking at Bakul's ratio. All right, are you ready to look at the SSG?
Yeah.
Yeah, okay. All right, let's see. 1 second.
Don't worry about it.
You can hit escape.
Okay, I think I did it. The escape didn't work for
Okay.
me. I didn't try
Okay.
that. I thought I had.
Okay.
Okay, here's the SSG. Okay, it is now 40. It says 46.72, but it was 47.93 today. As we know, that is from Friday, from BetterInvesting. Let's see. It was a lot different. Okay, my historical sales, I used the forecast of 10, and historical earnings per share is 9. I came up with these numbers by going with Zacks, Seeking Alpha, all of the analysts I can find that did cover it, and then of course I came up with an average, and I was pretty much a little less than that. So that's how I came up with my figures. I didn't block out any outliers because it was pretty much, it was seemingly growing up over the years, and I thought that's where it should go. So it didn't seem like it was a lot to pull out. It didn't make that big of a difference. As far as the high price, I went with 80.6. And as far as the low price, I went with 30.5 and 27 for my low PE, which is right at the 5-year average. You have to look at the quarterly data. With the quarterly data, it has gone up in the past few years, but probably, getting itself settled for whatever it's going to do next. Do you want to look at the sentiment?
We don't have a lot of time.
Okay, I'm fine. I'm finished.
That's okay.
Okay, but the thing is, again, when I first started studying it, it was 57.78, and now it's 47.93. So it might be something to keep on the watch list. What did you want to see my first cut, real quick?
Sure, it's the highlights.
Highlights, okay.
You don't. Yeah, you
the
don't have to
highlights.
read.
Well, that's already on BetterInvesting. And these are the companies I use for the analyst. I don't know why I thought I'd taken Morningstar out, but I guess I didn't. Yeah, that was supposed to be I. So as the highlight, they had a good analysis covered by Simply Wall Street. The medical equipment earnings growth is 20.5, revenue growth is 9%, future ROE is 11.2. When they started the company, just saw too many problems with people losing their limbs due to vascular problems, and he worked on a fellow who was a colleague of his and saved his leg. And from then, working actually out of his garage at first, he developed something that worked to save limbs and to assist with vascular surgery. And here he is. I think it's a great a great American success story. But any questions?
No, they did a great job.
That's great. You did. Thank you very much, Anitra. Now we have time. We wanted to allow time for discussion because I know in the past we haven't, people felt rushed in making a voting decision. So we're going to open up the floor for discussion about these two stocks.
I have a question for OL.
Yes.
I've downloaded your SSG. I saw, as you showed, that I'm trying to pull it up here, that the current price to earnings ratio is a good deal lower than the average. And I looked at the chart, and their earnings have gone up. They just most recently posted, I guess their fiscal year just ended, and their earnings have gone up. So I guess their price has gone down. So can you explain why their price has gone down? And
Sure. Well, the price has gone down mainly because they missed the estimates, or they missed expectations of earnings. And let me see, they missed Q4 2023 was 160, and Zacks expected a 167 earnings per share. So previously, RMD had been surpassing earnings per share estimates for the last twice in the last 4 quarters last year, and they had surpassed consensus in revenue estimates 4 times in the last year or so, in the last 4 quarters. So the fact that it was going really well, and then they missed this last estimate was one factor. And then another analyst, RBC Capital downgraded ResMed from sector outperform to perform. So those are two points of why the stock has declined.
okay, thank you.
I have a similar question. First of all 3 of you did like an excellent job in presenting the industry and the 2 companies. Very, very well done. I looked at the charts for both these companies, and I think ResMed for the past year has gone down by 40%, and LMAT had gone down by about 30%, or vice versa. I can't remember, but it's pretty steep decline for both. And so I'm just wondering, and it's been over a year. So are there any other reasons other than the downgrades, or do you know why there's pretty significant, like why they downgraded them?
Well, management said that the main issue is the margins. The gross margins decreased, and it was according to management, the decrease in the margins was primarily due to unfavorable product mix. In other words, they had to sell low margin devices because of there was a chip shortage and so the chip the supply is alleviating. So that's not as quite an issue now. Management also said the higher components and manufacturing costs, higher warehouse related costs, and unfavorable foreign currency movements. So that's what management said in June of 23 of this year. They have another financial for Q1 coming up in the end of this month, October
26th, I think.
Yeah.
Yep.
So that's as much as I know.
Okay. Be interesting to what they're going to say on the 26th.
Mm-hmm.
As far as LMAT, and it is LMAT. It doesn't seem like it is, but I listened to it, and that's what they call it. That's how they pronounce it. But I don't know why it's falling. I tried to find out why it fell, especially in the past week. But one thing I do know is that China is, as far as their growth, China is expected to receive approval for something called XenoSure cardiac device in 2024 and peripheral approval in 2025. And in Europe, they're expected to receive an allograft approval in Ireland or Germany in 2024. And also in Europe, they're expecting to file for CE approval for autograft this December. So they're definitely working on growth, but again, I don't have a very good explanation of the downfall other than their training and their sales force. They really need more salespeople. They're just getting it's something that's being approved in Thailand. In Thailand, they just opened some recent offices, and they got 3 new reps there, and they expect $1.5 million growth from that move.
Mm. Okay.
Oh, and they have an economic moat that's narrow.
Okay.
Okay, is that enough discussion, or does anybody, Jane, you usually have a comment or a question. Do you have any questions, Jane?
I just have similar concern about the dramatic price decline over this few months since August. I think Joel addressed that, and I think this is a valid, consideration. I mean, it may be a great opportunity to just buy in at this point, but I do want to know why it has dropped so much.
Mm-hmm.
I had a question earlier, and Joel answered it pretty well. I think I just want to say, I guess, is my opinion that when you got a solid company like RMD, they seem pretty solid from what Joel presented. The decline in price is, as long as it's not from a fundamental thing within the company that's very bad, that's probably a good thing in general. That the thing you want is getting cheaper. I know people are thinking like, well, it's going to get cheaper and cheaper and cheaper while we're holding it. That's what people are thinking. But I just generally see the fall in price of a good company to be a good thing.
Well, according to Morningstar, their finances, their balance sheet is excellent. Morningstar feels that the market is underappreciating the COVID closures of clinics, and they have purchased. They have made a number of purchases, a number of companies. From 2015, I listed those in the first cut. Curative Medical in 2015, Brightree in 2016, Healthcare First and Matrix Care in 2018, Propeller Health 2019, Medifox in 22. So they've made a number of purchases, and Morningstar feels that they're strategic and will help in electronic healthcare records and billing and advanced analytics. Will help nursing and the senior living providers. I think there are all these, according to Morningstar, the purchases are strategic and well balanced. And this company, by the way, this ResMed was apparently there was another study was done in 2020 by G. Joanne pointed that out. This was the price then was 157.64, and that was back in 2020. So now it's 141. So
Joel,
yeah.
You presented the Bakul's ratio, and they look great. Just wonder whether you have looked at the current quarter report and use Ron's observation, the 5321 observation.
I did not. I'm not familiar with the 5321 discussion, and so I didn't go into that.
Okay, thank you.
But in light of your past presentation of PayPal, was it PayPal?
Yeah.
Since you own PayPal, I decided to buy a number of shares as well. So yeah.
I have a question. Is it possible that the numbers went down because a lot of people sell off around this time, like around August, September, for tax reasons? Is it possible?
Yep, everything's possible.
Okay.
You haven't done the 5321, but have you done the most up-to-date Bakul's ratio on current year?
Yes.
Yeah, you want to show your, oh, I can show here. Here it is, 2023.
Yeah, correct. Oh, good.
On a personal note, I use a ResMed CPAP machine because I have sleep apnea, and I've had one for quite some time. So they are pretty expensive to buy, but so once you get one, mine is fortunately covered by insurance, but and the government here in Canada also chips in. So in Canada, even though they're expensive, they're heavily subsidized. And but where they make their money is on, you're supposed to replace the mask every 6 months and the hoses, and then there's some cleaning products that they sell as well. So there's ongoing sort of recurring revenue. But you can buy a new machine every 5 years. So that's the recommended cycle where you get a benefit from government subsidies and also from insurance. So there's a 5-year cycle on machines, and then every 6 months you buy a mask, and that's pretty expensive. It's about $300 on a $2,000 machine, $3,000 machine. So.
And is there software, a software subscription?
The software is free.
Oh, okay.
You can download an app and you can track your quality of sleep and things like that. But really, like, I don't use for the software tracking unless healthcare professionals are looking to collect that data. For the individual, once you start using the machine, it's you don't really, like, there's not a lot of benefit with the software. The only thing is if you're sleeping, say, on your side and the mask fitting properly, the software tells you that you had a leak or something like that.
According to some of the Morningstar reports, also having these cloud-enabled devices allows the providers or whoever's taking care of or looking after the patient. It allows the provider to adjust the equipment, over the cloud. It empowers their patients to track their own health outcomes, and it also allows fewer professionals to manage more patients.
Well, that's not good.
So, yeah. So this is although currently it's 12% of the revenue of ResMed, they're betting that it's going to grow.
Yeah, that part I might take exception with, just from my personal experience, because so in order to get a new machine every 5 years, you have to go and get a sleep study done, and that's done at a clinic. And then once you get your sleep study done, they set the pressure of the machine and the airflow, and then that's really it. There's not a lot of follow-up after that, unless you're having issues and so on. So I'm kind of like, I personally wouldn't, I've been using this thing for about 10 years, so I don't know if I would pay for software. If it was there really, for me, there's no need really to follow up.
The software is not only for the patient, it's also for billing. It's also for the whoever's providing whoever's paying for in other words, if the adherence rate, if you're seeing that the records that the patient is not using the equipment, is probably not going to reimburse for updates on the equipment or mask and the like. So
okay.
Software is also for billing. Software is also for the management, and also staffing, helps the staffing as well. Along the lines of equipment, my understanding is that there are various types of machines as well. The CPAP, which is a continuous positive air pressure. There's auto-adjusting APAP machines, auto-adjusting. There's bi-level machines that have a higher pressure when you inhale and a lower pressure when you exhale. So those might be, my understanding is that those are could be adjustable, whoever by the provider. So anyway, yeah, that's my take on that.
So in Canada, because we have universal health care, the government kind of gives you a subsidy for it. Where if you have private insurance, they don't require. They just pay for it, and that's it. There's no follow-up or anything. They don't see if you're using it or not. They just pay for it. That's it. But I think in the United States, it's probably a little bit different. That's the benefit of living in a socialist country.
Okay, we're at the end of our discussion for the stock study, so let's go to the open mic, right, Mina? You can open the mic for the guests.
Great discussion.
Is Mina still here? Oh, he left. Did Mina leave? John, do you want to take the guest questions?
Sure. Okay, looks like Helen, if you would like to talk about your experience tonight, I believe you are. There you go.
Hi, my name is Helen Albanese. I live in Atlanta, Georgia. My question is, do you have any information on research and development in these companies? I mean, you've talked about the the old equipment, and salesmen seem to be complaining that they're not getting the information, getting materials that they need to provide to hospitals and physicians. So I'm curious, what's the R&D in these companies? I mean, the budget for R&D.
Our ResMed invest 7% to 8% of their revenue towards R&D.
Anitra, did you have
Yeah, yes, I do. It looks like it's 191. One second. Let's see. Nope, not yet. I'll have to look and see.
Yeah, with ResMed, they invested in 22, 253 million, 7.1% of sales.
Okay, Helen, we're still looking for Anitra's company, but I hope that answers your question for ResMed. It's on the, should be on the income statement somewhere or in the notes to the income statement for sure.
Okay.
Yeah, we can move on.
Okay, thank you, Helen. And now, Jim, would you like to comment on, ask any questions about your experience tonight in the meeting? Jim, are you, let's see here. You're self-muted, Jim. You can just click the little microphone and it'll unmute you. Okay, well, you're unmuted from our side, so if you want to unmute later, you can. For the time being, we'll go to Margot. I'm going to unmute you, Margot, if you would like to share your experience tonight. Ask any questions. You're also self-muted. There you go.
I am very satisfied. I learned a lot, especially anytime I hear more about Bakul's ratios, it's better.
Okay, yeah, that's he is pretty knowledgeable, and those are great ratios for us to use in our analyzing investments. Thank you for coming.
For Helen, I have an answer for Helen.
Okay.
Okay, and thank you for asking that question, Helen, because if anything that pushes me to look further, I learn from. The research and development for this year, for 2023, has been, what, 4,516,000. So that's, and it actually, for the past 4 years, it went up for 22, well, actually, it says for the 3 months ended. So it's up from last year, I can say that. But I don't see exactly where they're putting it yet. Did that answer the question?
Thank you, Anitra. Yes,
Okay.
Helen, does that answer your question? If you're self-muted now,
Helen,
you want
Helen, I'm new and learning, so help me answer your question.
Okay. Well, until she gets back to us, we'll go to Philip. I'll unmute you, Philip, and feel free to share your experience tonight in the meeting.
My experience is very positive. I enjoyed Bakul's presentation and also the good analysis on the two proposed stocks. I was also happy about the buying checks last month for 113 to 118, so that was good. So very good meeting. So thank you.
Hey, thank you, Philip.
Welcome.
And now, Jim, if you're there, you could unself-mute and speak. Or if Helen, if you're there, I guess Helen is now not there. So there's Helen. Go ahead.
I just did a quick Google, and they talk about 10% increase, 12% increase over this year, last year, so-and-so. That doesn't really tell you anything. My thinking is that 4 million is a very small R&D budget for a company like that. Thank you.
Yes,
Thank you,
thank you for that feedback, and that helps us to make a decision, you know, on what we want to do with regard to either company or both companies. So thank you, everyone. And now I think we'll move on to business, which the first thing, right, Joanne?
Should I excuse the guests then, because we're going to get into voting and all that? I think I'm going to excuse the guests. Okay, and then
we don't have to, because in case somebody want to join us, they could hear how do we do business behind the scene.
I've
Joel
already.
is also for me in the attendee section, so you don't want to excuse him, of course.
Who?
Who? Joel, excuse me. I'm sorry, Joel. I see him over there. I don't know why.
Already.
All right. It's just my thing must be jacked up a little bit. Sorry about that.
Okay.
Okay.
Okay,
cool.
Okay, let's just go. Okay.
Yeah. So, anyone have any motions? I would like to make a motion, and I'm not sure how much, to buy RMD. I gotta look and see if it's about, I don't know, 5% of our holdings. But let me look that up while I let me go to my iCloud.
Before you make that motion, could I make a suggestion?
Sure.
Both these companies are going to report in about 10 days. Do we want to wait and see what they say before we pull the trigger?
Yes.
Okay. That's fine, but what are the logistics of actually doing that, though? You know, because we're going to have a lot of quarterly reports next month, and some people may want to recommend buys or sell, so we would look at those companies, obviously. But how would we handle? I guess Joel and Mitra would continue to kind of cover them for this next quarterly report, I guess, right? Or what?
Well, LMAT is out. LMAT is not even an option, correct?
Well, that's up to the club. It's up to any person making a motion, but it was covered tonight, and we do know a lot about it now. So.
Okay.
Yeah, it's up to everyone wants to make a motion.
So, Hanny, what do you think can happen with a quarter? Usually, it's like a sequence of quarters.
The stock price has been dropping quite a bit. Like, I think it's 40% for RMD, I think, and 30 for LMAT. So depending on how the earnings turn out, they could both drop further. But it would also tell us like what some of the issues that were highlighted. Are they being resolved? Are they taking further steps? That sort of thing.
Haney, that's a good point, but I was muted. I could not ask the question. It declined 40%, but this could be a chance to pick some of the stock, RMD, right?
Yeah, and on the flip side, Hanny, if they have positive results, would the stock jump?
Yeah, that's possible.
It can jump.
I mean, another way to do it would be to, if people are interested in buying RMD, then buy a certain amount now, and then wait and see what happens at the, basically, as opposed to buying it all at once, sort of ease into it.
Yeah,
I think
we haven't.
That's okay with me, I guess. Not that it matters. I like that. Maybe I was thinking the total I would like to acquire for the club to acquire in the end would be $3,000 worth right now. Not right now, you know what I'm saying? I'm down with the 1,500 and then 1,500 if it looks good to us, or I guess we could. I don't know what we do if we don't like what happens in the quarter. I'm not sure what we do with that $1,500 worth, But if we do like what happens, then just acquire the other 1,500 and pick someone. If this all this assumes it passes, of course, but if it does, we assign someone to cover it, and they cover it for the next quarter.
At $141, we get about 11 or 12 shares.
Was $1,500?
Yeah.
Okay. Okay. So do you want to make a motion? Somebody can make a motion.
Sure. Okay, I'll make a motion that we purchase $1,500 worth of RMD.
Any seconds? Oh, I'm going to do the my iClub.
Okay.
You want to round off to the nearest share, 11 shares?
We're going to do $1,500 of. Oh, but somebody's got to second it. If
it's gonna go forward.
I'll second.
Okay, and then so we had an issue last month with PayPal. It wasn't open long enough. So how long do you guys want the voting to be open?
More than 24 hours?
I think PayPal was more than 24 hours. There was a couple of days.
So today's the 16th. What do you want? A week? The 23rd?
Oh no, not that long.
I think after the video is uploaded, then we need to have a few days for people to view it and then make an informed decision.
Okay, so what do you say, Jane, for the date?
Usually you upload them, I think, on Friday or Thursday that week, right?
What do you mean upload?
You upload the video, the recorded session or meeting.
Oh, you want the video? Okay.
No, the meeting, because some of people don't attend the meeting, who didn't attend the meeting will have to view your video, right? In order to.
So do you want it a week?
I don't know what day do you upload. I observe is that Thursday or Friday.
Usually Wednesday by Wednesday.
Wednesday, that will be my Thursday. Yes. Okay. So if you do it on Wednesday, probably it is a week that they have a couple of days to view it.
No.
So what day?
No, Monday is the meeting. Wednesday it gives 3 days.
No, Wednesday will be the time to upload the video, right? And then you need a couple of days for them to view the video.
So 1 week.
Yeah,
well,
1 week's fine. I mean, it doesn't matter as long as it's enough time.
Who didn't attend? I want to know who wasn't present.
No, it's not about that. It's about the future. I'm not talking about PayPal.
You're not talking about what?
I'm not talking about PayPal in particular. I'm talking about in general in the future.
Yeah, but who wasn't in attendance at this meeting that needs to look at the video?
Actually, I'm not sure anyone was not in attendance for this one. Christopher was here, right?
I think Jane is just saying in general. When we do voting, in case someone is not available, give them time to review the video and then vote. Okay, so what if we make this as a rule? The meeting's on a Monday, the video's loaded on Wednesday, and voting has to be completed by Friday. Is that okay? Okay.
With a suggestion, right after the meeting, follow up with an email.
You get an email. You get an email. Okay, and then if the majority has completed before Friday, then it closes. So you might not get a chance to vote if the majority has already voted. So close voting sooner if majority is reached.
Right. You don't want to give it a week?
I would say
but if the majority is reached, it wouldn't matter if anybody else votes, would it?
That's right. That's why it closes. And that was a reason that they offer that option.
She has to select that option.
No, it is selected now.
Oh, you selected it. Okay, got it.
No. Well, anyway.
Okay, notify members via email when voting is ended. So is that right? We all good?
I will consider giving 1 whole week because we have the meeting on Monday evening and then we just give a whole week.
Yeah, give them a full week.
Yeah, whole week, so they have plenty of time over the weekend to view it.
Okay. Ready? So is that okay? All right. Everybody agree?
Yeah.
Yes.
Okay. So Monday is the meeting. The voting is until next Monday or next Sunday.
Yeah.
Meeting on Monday. Video loaded on Wednesday. You must complete your voting by the following Monday. But
Yes.
if the majority is reached before that, you won't get a chance. Even if you want to vote on the 23rd, you can't vote because the majority's already been reached.
Correct.
So people, please vote early and often. Okay. I'm saving this and notifying. Okay. Uh-oh. I hate this. It goes numerous times. Okay, so I'm gonna delete this one. Okay, so here we go. Okay, that's there. Any other motions?
Oh, this limit order also should have a limit, time limit.
It is already, it's already been purchased.
I did purchase because I did
Oh,
not
it's
know.
3 months. We said 3 months.
Oh,
The
okay.
limit order is open for 3 months.
Okay, that's what my
Yeah,
question is.
okay, 3 months.
Okay.
Okay. Is there anything else?
So
Okay.
is my purchase of PayX is okay?
Yes.
Yeah.
Okay.
Yeah.
And Jay will follow that. And okay. And then if ResMed passes, then that will be Isla's. Okay. Next month is Joel is going to give a 5 to 10 minute education topic. You can just do Joel. You could just do a thing on anything that you've took a deeper dive into, like the cDNA. You were asking Bakul about that. That would be an interesting thing to talk about.
Okay.
Okay. So do we let's see, do we have what the next stocks are for review? Let's see, September. All right. Oh, wait. Okay. November. Okay. So it looks like Piero, Amazon, Hanny, Freeport. Oh, who's took Meta? Is that
Mitra.
Anitra?
Yeah, I didn't update that yet. Sorry.
Oh, that's okay. John's got Google, Reddy's got IIPR, Mina's got LGIH, Christopher's got Qualys, Joanne's got Schwab, Jane's got Vertex. I looked at my Schwab. I think that's not going to be out till the 8th.
Okay.
So we'll have to see if Morningstar gets updated.
Oh, yeah.
Okay. Can you assign the new stock PayX to somebody?
Paychecks is going to be Isla.
Okay.
No,
Said Jay.
wait, Paychecks is Jay.
Okay, wait. Is
Paychecks
it
is
Paycheck?
Jay. No,
Paycheck?
you're a ResMed. Let's see. This is Jay is, I don't know, is yeah, Jay's Paychecks.
Okay.
And Isla is, well, we don't know yet.
We don't know. All right.
Yeah. Okay. I think maybe this is Q3. They'll have to double check on me on that, John, on the Paychecks. Okay. So are there any other questions?
I have a question to Hanny. Hanny? Hello?
Yes. Yeah.
Henny's here, right?
Yes.
When I entered pay checks, the portfolio from the site comes with a strange date that even though I picked the price on, I think 9/21, it shows that price is not updated in the site. I don't know why it does that.
So I'm in my iClub ready. Where do you want to go? Where should I go to show this?
Slide, okay, slide, not slide 14.
Report. Which report?
Okay, slide 7, portfolio review. Portfolio review under PayX, unassigned SSG, and the price date is shown 0 and 1101.
Oh, right here.
Yeah, I don't know why.
Because none of this is filled in. I think it's because should we attach an SSG and a?
Okay, so that means it really needs the SSG. That's why it's showing last 4 or 5 columns NA.
Yeah, I think we need to attach.
Yeah, that makes sense.
Okay, so that means it has to be assigned. Somebody has to fill up the SSG and attach it.
Yeah, that's. Or we can just attach the stock study, but Jay will do that. Just tell Jay to update. Say, Jay, can you update my iClub? Or link it. That's all she needs to do is link her SSG. Okay. All right. Do you think I can give you guys back 14 minutes? Are we done? Unless anybody wants to. Anybody have any questions, concerns?
I don't see where do you vote on my iClub? Never mind.
Where do you go?
Vote. Where's the vote thing?
Oh, where do you vote? You can go here. Go to voting, and then you go. So current motions will come up.
Oh yeah.
And you can just okay.
Joanne?
Yes.
Do you want to review how to link the SSG to iClub?
I sure can. Okay. I think you go to my account. You go to establish BI link. So I'm already. I think you link it. Let's see if I can unlink and relink. So I sign in. Let's see. Oh shoot, this is not right. Oh, maybe it's this one. I can't remember my credentials. BI username, BI password. Let's see. Oh shoot. So anyway, that's what you do. You come here. Okay, let me see. Can you get that far, Isla?
Yeah.
Okay, that's basically what you do. And then you go pick your SSG. And I can help you. I just can't, I don't know why this isn't working in the my iClub. I'm just gonna quick do a password search. Any other question while we're waiting?
None that I can think of.
Okay.
I sent an email to everyone on Friday, June 23rd. If you want to check that out, I think it should be. I think it was sent to. I think it was sent to everyone. So.
What was it?
Yeah. You sent an email on how to link SSGs to myiClub.com.
Oh, okay. You want to forward that to everybody?
Good idea.
just write the instructions on a page and send it to everybody.
Oh, I wonder why it's not letting me change my password. Is that weird? See, how do you change your password? Oh, change password. Oh, but it's like it's asking for my current password, but I don't know my current password. Minimum of 8 characters.
I can say that it's my iClub is linked to my SSG, but I can't seem to put in Meta because I already have one on Meta and I can't put it in. So
can we see your screen? I'm going to give you. Let's look at your screen. It's better if I.
Sure.
Okay.
Oh.
Okay. Let's look at your screen.
Okay. All right. Okay. So, okay, that's you. I'm trying to. Let's see. Okay, here we go. Uh-oh, that's not where I was trying to go.
Go to my iClub.
I was already in it and trying to figure where it went to.
Created by Brahma.
Where did it go? I was already in my iClub.
Just type in my iClub at the top in the browser.
Okay. Go in it again. Okay, bear with me. All right, you said go to your account.
Yeah.
I went to my account, establish link. I'm already linked.
Oh, you're already linked. Okay.
Right.
Okay.
But then when I go to when I go here to portfolio review and I go down to Facebook, it's not letting me link it. Now here's my, well, that wasn't it. Here, that's not it either. My SSG for Facebook is here, and I just updated it, so it's updated.
Okay, now, this is what I want you to do, Anitra. Okay. This is what I want you to do. Go to data, down.
Okay. I'm switching AirPods, but one just died. Okay, go to data.
Refresh study data.
Okay.
And you're going to create a copy of this. Create a copy. And you're going to name the study name Meta, and get rid of the date and say my iClub.
Okay.
Okay, and this is the only SSG that you will update. You will not, if you need to have a separate one with a date, you'll do a create a copy, but this is the only one that you're going to update for my iClub.
Okay.
So refresh.
Update portfolio is this one. Okay, refresh data.
Okay. Now go back to your my iClub. Okay, so if you click that drop down, what happens? Oh, it's not linked. It's not linked. Okay.
But it says I was linked, remember? You know what?
No, you skipped a step. Okay, go back to my account. Establish BI, go to establish BI link. Okay, wait, now let's read the instructions. So you may now link your SSG plus stock studies to any stock you've been assigned to watch on my Stock Watcher assignments page. So let's go to reports, go home. Oh, IMIC, or that IMIC. No, IMIC, yeah. Okay, reports, my assigned stocks, or Stock Watcher assignment. Yeah.
Oh, that's what's going on.
Okay.
No.
Okay. Can you click on that? Oh,
When I
What
click on
about its the ticker is FB and the real ticker right now is Meta? Does that
oh,
matter?
Meta.
Does someone who has control access to administrator privileges have to add Meta into our stock watcher or whatever?
Ready?
and I voted.
Ready?
Yes.
We think that Anitra can't link her Facebook because it's not called Meta.
No, the whatever the website as designation,
Try
we
that.
should
Try
use
up there. Sorry to interrupt, but
Oh, yeah.
try up there. Establish.
Click
Try
on that establish SSG.
Yeah, it is okay.
No.
Looks like in her library she's still using Facebook FB.
Oh, in
She
her
should change it in her library.
okay, let's go. Anitra, go. No, hers just says Meta.
Yeah, my SSG
in her,
says Meta.
Yeah.
Yeah, in our folder, your
This folder on my iClub.
okay. See on the left side, security. Under the security, you're still trying to link the Facebook, FB, the older version.
Well, I didn't put it there. All I saw was my name was there. I mean, wait, where was it? Review. My name is here, so I was just, which I think was just added, or maybe it wasn't. And so I said, while we were on the call and you were talking about it, let me put it in. But
And Ready, it looks like Ready. If you go to back to that review, portfolio review, Anitra, Ready, it's the system. Like, is there something you can do to change that to Meta? Can you change that?
No, but okay. In the club, okay, it is showing as FB. Okay, that's the problem. Let me look at the club company.
excuse me. Oh, I muted you.
Okay, I'm going to let everybody else. I'm going to stop the recording and everybody and adjourn the meeting. Is that okay with everybody?
Yes, of course.
Okay,
You guys fix it. I'll